Okay, so let's just kind of go over some of this that we began and continue on with 52A. McCoy Warehouse distributes hardback books to retail stores and extends credit terms of 210 net 30 to all of its customers. Okay? During the month of June, the following merchandise transactions occurred. Purchased books on account for $1,040, including freight, from Carlin Publishers. Terms 210 net 30. What is the first transaction we're going to do here? What are we going to do with that first one? Debit inventory of how much? 1040. And we're going to credit accounts payable of 1040. The next one. Sold books on account to Goldschmidt Bookstore for $1,200. The cost of the merchandise sold was $720. Now we know with this we've got to do something unique, don't we? Why are we doing something unique here? We need to show two transactions. Why is it we need to show two transactions?
For the inventory and then the service revenue.
Perfect. For the inventory and then also for the revenue. So the first transaction that we're going to show is accounts receivable of how much? $1,200. Sales revenue of $1,200. And what's the cost of goods sold? $720. And inventory of $720. Good. Now accounts payable. Then it says on June 6th, receive $40 credit for books returned to Carlin Publishers. What's going to happen there? Some books were returned. So what's that going to do for us, guys?
It's going to lower our inventory but increase our funds.
Receive $40 credit for books returned to Carlin Publishers. So it is going to lower our inventory and it's going to lower what we owe them, isn't it? So a debit to accounts payable of 40 and a credit to inventory of 40, isn't it? Make sense? Okay, then the next one, as we move on here, we're going to have sold books on account to Town Crier for $1,200. The cost of the merchandise sold was $730. Are we going to have two separate transactions there also? So basically what we're going to need to do there is show the sales. Okay, let me just see what I'm, number 9. Where sold books on town, guys, I missed 2 of them. Paid Carlin Publishers in full. That's June 9th. So to pay Carlin Publishers in full, what is it we need to do? Did we take advantage of any discount?
Yes.
So what is our accounts payable? What should we debit there in accounts? 1,000? So June 9th, I'm just seeing where I'm at here. So this is 1,000, guys. And what's our cash? 980. And our inventory gets reduced 20. Does that sound right? The next one is going to be received payment in full from the Goldschmidt Bookstore. On the 15th, did they take advantage of the discount? They did not. So we received payment of how much? 1,200? And we're going to reduce our accounts receivable by 1,200 from up here, since it was, the transaction was completed, okay? Make sense? Okay. On this, June 17th, we show here sold books on account to Town Crier for $1,200. The cost of the merchandise sold was $730. So what are we going to show as the accounts receivable? And the cost of goods sold that we want to reduce from our inventory is how much? $720? Did I do it wrong? $720 or $730? Oh, the 17th. I'm sorry. $730. Okay? Now, the next one shows us paid good book publishers in full. How much did we owe good book publishers? Purchased books on account for $720 from good book publishers. So we bought them for $720. The discount was 1% in 15 days. Did we take advantage of the discount? So we are going to, what am I doing wrong? The 20th. Purchase books on account for $720 from good book publishers. I'm jumping ahead of myself. So here's where we're going to show the inventory increase to $720. We're going to show the accounts payable there of $720. The 24th received payment in full from Town Crier. Town Crier, how much did they owe us? $1,200. And did they take advantage of our discount? They took advantage of our discount, and our discount was $210, right? Net 30? Do you see that? So we're going to show that they took advantage of our discount. How much would we have received in cash? $1,176. So the discount was $24. Discount of $24, and we're going to credit our accounts receivable of $1,200. Anyone have questions on this? Is it making sense? Let's look at June 26th.
I do have a question.
Yes.
How, can you explain the discounts again? How they used the discount? Because I was looking at
Okay, so you want to know how they use the discount or how you calculate?
Go back to the, both. I guess can you go back to those?
Okay, who can explain how a discount is used? Who wants to explain this?
I mean, can you go back to the other screen, please?
Are you talking about this one here?
Yeah. Like on there, where did it say they used the discount?
Well, we show here that McCoy distributes hardback books to retail stores and extends credit terms of $210 net 30. So it's telling us that if any customer purchases their items and receives payment within 10 days, they're eligible for a 2% discount here. It's a blanket statement for all customers.
What about the net 30? What's it? Same thing?
Net 30 means if they pay within 10 days, they get a 2% discount. Otherwise, they're required to pay the entire balance in 30 days.
Oh, okay. So then they paid within 10 days, so that's why they took advantage of this.
Correct. And if you guys have how many of you guys have read this chapter? Who's read the chapter? If you read the chapter, it explains all this, okay? So it's important before we start, especially after I kind of go through a PowerPoint, that you read through the chapter. You're not going to gain all the information just in this class. Are you guys required, do you know what I'm talking about? How they'll say, if you're in class, you better spend at least 8 hours a week out of class. Do you guys know what I'm talking about? Do you know what I mean? What? So, I'm here to do anything I can to help you, but you also need to spend time out of class because you're not going to gain it all just sitting in here. Okay, so as we move on, we've got now, we did the 24th transaction. Now we paid Good Book Publishers in full on the 26th. How much do we show we paid Good Book Publishers? What do you want to say? Billy? What did we pay Good Book Publishers June 26th? So we're going to debit our accounts payable for $720. Did we take advantage of the discount? That 1% discount? Yes. So 1% of 720 is what? $7? And so therefore we paid the cash of $713, didn't we? Right? Now, on the 28th, sold books on account to Emporia Bookstore for $1,300. The cost of the merchandise sold was $780. What are we going to do here, guys? We sold books on account for $1,300. The cost was $780. Again, we need to do two transactions here, an accounts receivable, sales revenue, along with the cost of goods sold. So the accounts receivable is how much, guys? $1,300. Sales revenue of $1,300. Cost of goods sold is how much? $780. Anyone have questions on that? Does that make sense? Last, granted Emporia Bookstore $130 credit for books returned, costing $80. Okay, there are going to be two transactions here, guys. We gave them a credit of $130, and the books cost $80. Sales returns and allowances, $130. We're going to reduce how much they owe us by $130. But our inventory gets increased again, doesn't it? Because the books came back to us. So the inventory gets increased by $80, and we show that we actually didn't sell those books after all. Any questions on these transactions, guys? Do you guys think you could do a problem on your own with this? Yes? No? Yes.
It depends on if we have the template or not.
Well, you know what? I'm not going to try to be mean, but I'm going to tell you something. I expect you guys to work this stuff on your own too. Okay? And I'm not trying to sound like a nasty person, but if you guys don't put in the effort out of class, it's, don't expect me to just give it to you. I'm here to help you, but you guys have to do the work too. If it was easy, you wouldn't be here, okay? It'd just be osmosis and you'd get it. So chances are I won't be giving you the template. It's going to be your job to know the accounts, okay? While we're here in class, I'm helping you with these templates. But on a quiz, that's your job to learn this. Make sense? How you guys doing? How many of you guys are in here for accounting or for another? You guys aren't all here for accounting, right? A lot of you for business, okay. You know, one thing that I find interesting, a lot of CEOs of large companies, a lot of them are, you know, big, either CPAs or accountants, just only because it's helpful to learn that financial aspect in business, period. You know, whenever you're in business, understanding the financial arena is going to help you in all aspects of life, even though you really don't want to do accounting. It's still going to give you a whole lot of input in the business world. Okay, do we want to do 5.3, guys? Yes? No? We can move on to the next chapter. Any questions? Yes? No? Okay.
Season on April 1st, the ledger of Flint Hills Pro Shop showed cash 2,500, inventory 3,500, and common stock 6,000. The following transactions were completed in April 2014.
So what is our job? We're going to journalize these April transactions using a perpetual inventory system, okay? So let's start by having each one of you, Avery's going to start the ball, by journalizing these transactions. Then we're going to have some other pieces we're going to do here, okay? So Avery, tell me about April 5th. How are we going to handle this one?
We purchased golf bags, clubs, and balls on account from Acres Corporation for 1,500 times 310 and 60.
So if we purchase this inventory on account for 1,500, and we know we're going to utilize this discount, do we take this discount into account yet?
No.
Why not? We haven't paid it yet. Good, guys. So what are we going to do here, Ave, as far as how are we going to record this transaction?
Inventory is going to go up 1,500 and our accounts payable will go up 1,500.
How many agree? I'd say Avery's right on the money. Perfect. Okay. Who's next for the next one on April 7th? Jackie? Anyone? I guess I don't have a Jackie in here, huh? That must be the other class. Oh, Kendall. I love that name. Kendall! Paid freight on Acres purchase of $80. What are we going to do there? Kendall, do we add this to our inventory? Or is a sales a cost? Cost of sales. When we have to pay freight on inventory we purchase, it's going to get added to our inventory. If we pay freight because we're selling product to someone, then it's going to be a sales cost, a sales expense. Okay? So how many of you guys have heard of that store, Sierra Trading Post? Anybody? So I bought some clothes from them, and I'm still waiting for them to come. They were in Egan yesterday morning, but I still didn't get them. And so I had to pay sales costs. I was responsible for the freight. I purchased it, and I'm responsible for the freight. So, but let's just say I purchased this inventory because I'm going to sell it again. Let's just say. So I'm purchasing inventory, and I had to pay the freight. That freight would get included in my inventory cost, wouldn't it? If I'm paying freight to increase my inventory. But if I'm paying freight as a result of selling a good, that's a sales expense. It goes in our operating costs, okay? So what are we going to do here? Inventory, in this case, is inventory going to get increased? Inventory gets increased $80. And what do we do with cash? We paid for it, so cash gets decreased $80, right? How many agree? Okay. Kevin? Is there a Kevin?
Yep.
Kevin, you want to do this one?
April 9th.
April 9th.
All right. Received credit from Acres Company for merchandise returned $200.
Okay. So, what are we going to say here? Merchandise got returned, Kev. So do they owe us less money now? They're going to owe us less money. That's why we're debiting the accounts payable, right? And our inventory is going to get reduced because we don't have that inventory we thought we had. Make sense? Okay. Who wants to take the 10th? Anybody?
Sold merchandise on account to members 1340 at terms net 30. The merchandise sold had a cost of $820.
So what does it mean, sold merchandise for net 30? Where's the discount? There is none, is there? It's just net 30. So what are we going to do on this transaction, guys? 1340 is how much we sold, and it had a cost of $820. How much do they owe us? What would be the amount that they're going to owe us? $1340. And what was 1340? And how much did the merchandise cost? $820. So we're going to show that we sold that inventory, and we're going to reduce our inventory by that amount, aren't we? Is it making sense? Yes, no?
Yeah.
Okay, is the attendance sheet done? What? Oh, it didn't get down there. Who wants to take the next one? The 12th. Purchased golf shoes, sweaters, and other accessories on account from Palmer Sportswear, $830. Terms 110, net 30. What are we going to do here? Our inventory increased by how much? $830. And we're going to owe them now $830, right? So the next one. Paid Acres Company in full. How much did we owe Acres Company? We owed them $1,500. But then how much did we return the merchandise? See how we returned merchandise of $200? So how much do we really owe them now? $1,300. So what will we do here? What are we going to do here, guys? Debit $1,300 to accounts payable. So $1,300 here. And how much do we pay? What is the discount we took advantage of? We took advantage of a 3% discount, which was how much? $39? $39. So how much did we ultimately pay him? $12.61. Does that make sense? Next one.
Can you go back over?
Sure.
Can you explain how you got the inventory?
I'm sorry.
The 39 for the inventory?
How did I reduce it?
Yeah.
Guys, how did I reduce this inventory? Why did I reduce it?
Because of the terms.
Because of the terms, meaning what do you mean because of the terms?
Because we paid it within 10 days. So we
Because since we paid it within 10 days, we really didn't have to pay the full amount. We took advantage of that 3%. So since we took advantage of that 3%, our inventory doesn't cost as much as we originally thought it cost because we're paying less. Think of it like this. If we purchase, let's say that we are purchasing 12 tables, and originally we were going to spend $250 a table. Times 12 tables would be how much? 2,500, about 3,000.
Yeah.
So we're going to spend 3,000, and this 3,000 is going into inventory. But what if we had a discount saying 2% we get reduced in 10 days, or net 30? And if we took advantage of this discount because we paid our bill within 10 days, 2% of 3,000 is how much? $60. So if we pay this within 10 days, instead of paying 3,000, we're going to pay $2,940, aren't we? So really, our inventory shouldn't be 3,000; it should be $2,940, which means we get to reduce this inventory by that $60 because we really didn't pay $3,000 for it. We reduced it. Does that make sense? We're only showing our cost. And if our cost got reduced, we can reduce it, the inventory, by that amount. Make sense? Any questions on that, guys? Okay. So next, on the 17th, who wants to read this one, guys? I'll read it and someone can help me. Purchased merchandise from Frederick Distributors for $2,500. Terms 210 net 30. So we purchase the merchandise, but we don't record any discounts until we are paying the bill. So we purchased how much merchandise? What's the merchandise we purchased? $2,500, right? So, on the 17th, what am I doing?
Yeah, and ours it says receive credit from Palmer Sportswear for merchandise.
Okay, I think I'm on the wrong. I went to the wrong. 266 is the right one. 266. Okay, just the wrong problem. Would you believe it if I told you I did it on purpose to see if you were awake? Probably not, huh? Received credit from Palmer Sportswear for merchandise returned, $30. So what happens here? We returned merchandise. Does that reduce how much we owe them? For $30, and our inventory goes down. How much? $30 because we don't have that anymore, do we? Now let's look at the 20th. Made sales on account to members of $810, net, terms net 30. The cost of the merchandise sold was $550. So what will we show our accounts receivable to be? $810. And what is, boy, okay, and what was the cost of that merchandise? $550? Do you guys understand why when we sell product, we have to report two entries? One being the amount we sold, the another being the cost of that inventory? We've got to do both pieces to remove it. Okay? Now let's look at the 21st. Paid Palmer Sportswear in full. How much do we owe Palmer? Here it was $830. Then we got a $30 credit. So how much do we owe him? $800. So we owe him $800. Did we take advantage of any discounts? We did. So $800 here is the payable. We took advantage of the discount of how much? $8. So we ultimately paid him $792, didn't we? Make sense? Yes, no? Okay. Whoops. Now, let's look at the next portion. Using T accounts, enter the beginning balances in the ledger account and post the April transactions. So what are we going to do now? Thank you. Thank you. Granted an allowance to members for clothing that did not fit properly, $80. Well, that's weird. Where are my transactions? I must have screwed them up here. So what is the date there, guys? The 27th. 27th. Okay, you guys, here, how can I do this with this template is, let me just do it down here, okay? The 27th, and what is the amount? We did a sales, returns, and allowances for how much? 80. And they owe us now $80 less, don't they? So $80, I'm just having a hard time putting this in. Debit of 80. I apologize, I can't seem to get this in here. Okay, let's do that. Sales, returns, and allowances and accounts receivable of 80. Okay? We'll do it over here. Sales, returns, and allowances. Sales, returns, and allowances of 80. And the accounts receivable gets credited because it's down 80. And then what's the last transaction? what date is that?
The 30th.
So we receive payments, cash of how much?
1220.
120? 1220. And what are we going to credit?
It's not cash, it's on account.
On account. Okay, it said receive payment.
Yeah, receive payment on account.
So if we receive payment on account of 1220, we'll debit cash for 1220. What will we credit? Accounts receivable for 1220, right? Okay? Are those the last two transactions? Now what do we need to do? We're going to go to our T accounts and we're going to input a bunch of information now. I'm going to tell you this is where it can get tricky. It's easy to make mistakes, guys, with transferring numbers. So do you see how we have all of our T accounts right here? They want us to input the beginning balances. This is common stock here. What were the beginning balances they told us about?
Cash 2500.
Cash 2500 was a beginning balance, 4-1 balance, 2500. What else did they tell us was a beginning balance?
Inventory 3500.
Inventory 3500. Let's see here. Go down here to inventory 3500. Beginning balance. What else?
Common stock 6000.
Beginning balance. And would that be a debit or a credit, guys? Common stock is normally what kind of balance? A credit balance, isn't it? How come we know that it's normally a credit balance? It's part of stockholders' equity, isn't it? Does that make sense? Okay. I'm going to reduce this just because so it's a little smaller. I can fit it all. Okay, so now they ask us to take all of these accounts and transfer them. All these journal entries that we've done, we're supposed to transfer them into all these various T accounts. Let's start with the very first transaction up here. Inventory on April 5th. Inventory is a debit for $1,500. Accounts payable is a credit for $1,500. What we're going to want to do now is we're going to want to find our inventory T account, and we're going to show April 5th a debit of $1,500, and then we're going to go to accounts payable and do a credit of $1,500. So let's go down here and find our T account for inventory. Do you see this? What are we going to do here? On April 5th, we're going to debit $1,500, right? And our accounts payable, what are we going to do over here? Our accounts payable is going to be what? A credit of $1,500, right? Does that make sense? Let's look at the other transaction we have. On April 7th, what are we going to do with inventory? What are we going to do with inventory? Debit it for $80. And what happens to cash? Decreases for $80. So our inventory on, what is the date of that again? On the 7th. Our inventory on the 7th is what? An increase of how much? 80. And cash gets what? Cash needs to be decreased 80, right? On the 7th? Do you see what we're doing? We are now posting the entries. We journalize these transactions by creating journal entries. Now we're posting those transactions to the various accounts. Do you see how the process we're doing? Posting them means we're basically taking each one and showing each account they belong to.
You should have told us that before this last quiz.
What?
You should have told us that before this quiz.
Did you not get that on
No,
your
I had
matching?
it right, but I had to like search the book to find it. It was, yeah.
I bet you're not going to get it wrong next time either. Didn't get it wrong that time. Okay, what are we going to do this next one? On the 9th, which are the two accounts we're going to post to?
Accounts payable and inventory.
So accounts payable is a debit. Do you understand why it's a debit? Because it's on the left side. It's on the left side here. Inventory's a credit. So on the 9th, we're going to find accounts payable. And what are we going to do here, guys? Accounts payable is April 9th, a debit of 200. And inventory is a credit of 200. Do you guys see, really, all I'm doing is taking each of these transactions and posting them. Who wants to take the next one, guys? What's the next account we're going to debit and credit? Anyone?
Accounts receivable for 1,340.
Okay, on April 10th, 1,340. Okay.
Credit sales revenue.
We're going to credit sales revenue for the same amount on April 10th, 1,340. Okay, what else are we going to do? That's it there. Who wants to take the next transaction?
We have cost of goods sold for 820.
Cost of goods sold for 820.
Inventory.
Cost of goods sold for 820. And what's the date again? The 10th? 820. And our inventory gets reduced, right? 820. Do you guys see how I make sure I debit one, credit the other? Next transaction. What happens to inventory? It gets debited on the 12th. Inventory. What did I just do? So inventory, what just happened? Inventory gets debited on the 12th for how much? How much?
830.
Okay, and then what happens to the other end?
Accounts payable gets credited.
Accounts payable gets credited for how much? Where's my accounts payable? Is that my first time I'm... Gets credited for how much? 8:30 on April 12th, 8:30. Okay, what's the next one we're going to do, guys? Next transaction.
Accounts payable.
accounts payable. And what's going to happen to our accounts payable?
It's gonna be debited 1,300 on 14th.
April 14th, debited 1,300. And what's our other side?
Cash is gonna be credited 1261 along with inventory for 639.
1261. And then we're going to reduce our inventory by how much? 39. Everyone see how we're doing this? Does it make sense? Okay. I think what I'm going to do, because see if I can bring this down here. Okay. Then what's next? $13.40. Which one is that? $13.40. Oh, this was sales revenue here. Sales revenue. This piece put it up here. The sorry about that, guys. There's so much formatting on this, I'm screwing it up somehow. Okay, next one, guys. What's the next transaction? Next.
Credit from Palmer Sportswear for merchandise for $30.
So what are we going to debit? What are we going to credit? Which transactions are we taking this to? What are we posting? Which two accounts? Accounts payable on what date? April 17th? So April 17th, we show a debit for how much? 30? And what is our credit? Inventory? Do you guys agree? Okay, the next one. Who's going to take the next one? So if we go up here, are we at this accounts receivable of 810 and sales revenue of 810? Right? So we're going to post this one. On the 20th, we're going to debit our accounts receivable 810, credit sales revenue of 810. So our accounts receivable 810. And what date was that? On the 20th. Do you see how I always put the date in there? And our sales revenue is how much? Okay. What other transactions do we have?
Cost of merchandise.
Cost of goods sold $550, inventory $550. So again, this is going to be April 20th, $550. We're going to reduce our inventory by $550, aren't we? And then I think we're getting pretty close. We've got a couple more on the board here, but what's our next one?
Pay Palmer Sportswear in full.
Accounts payable was a debit of how much? Do you guys see what I'm looking at? The journal entry? Accounts payable of 800, cash of sales 792. So we debit accounts payable of how much? 800. What's the date on this one? 21st, 800. And our cash is going to be how much? Credit 792. And what else happens? Inventory credited. How much? $8. And then don't we have those two transactions over there we need to finish? And what are those? Sales, returns, and allowances of how much? Sales, returns, and allowances, 80 on the 27th. Okay. And that's a debit? And then what's the other part? Accounts receivable of 80. And then what else? Cash debited $12.20 on the 30th. Okay, and what else? Accounts receivable debited $12.20 on the 30th. So we basically posted all of those transactions to the various accounts. Now what are we going to do? We're going to come up with the new balances on all these accounts, aren't we? So let's look at this. We're going to start up here with cash. We started with a $2,500 balance, and then we added to the debits $12.20, and then we're going to subtract the credits, the 80, the $12.61, and the $7.92. What does that give our new balance? Anybody? What? Who's got that attendance sheet? Thank you. Is it making sense, guys? Are you lost? Are you just bored? Tired?
Tired.
But does it make sense how we're doing this? Are you guys following it okay? Okay. So what's the total here?
I think it's 1,587.
1,500. And 87? I think you're right. So balance 1,587. How about accounts receivable? How about Darren? Accounts receivable? What's going to be our balance here? How are we going to determine this, guys? Our balance is going to be, we're taking all of our debits, totaling them, our credits, totaling, subtract. 850, perfect. Who wants to take inventory? Take all of our debits, all of our credits, subtract the difference. How about Matt? What?
So 5,950 minus
4,263.
Perfect. Did someone help you? That was a hard one. 4,263. Okay. Accounts payable. Cyrus? accounts payable, Cyrus?
He's calculating.
1,000.
Who wants to help Cyrus?
He said 1,000.
What?
He said 1,000.
I know. I'm saying who wants to help Cyrus?
1,000. 5,000.
0. It's 0. Balance is 0. Common stock, 430, 6,000. Who wants to take? Are we? Is that everything? No, we're missing something.
Is that some sales revenue?
It's got to be up here. Sales revenue. Where'd it go? Sales revenue. The balance is what? 2,150. Cost of goods sold is how much? 1,370. Sales returns and allowances. $80. Now what the next thing we're supposed to do with this problem is we entered the balances in the ledger accounts and posted the April transactions. Now we need to prepare a trial balance. So our job is to go and take each of these balances and post them to the trial balance. So our sales revenue, we're going to take this amount of $2,150 and we're going to go and on the trial balance, was that sales revenue I just did?
Yeah, okay. 2,150.
We're going to take this sales revenue, wherever I can, and put 2,150 down here. So you guys help me out with this. What is our cash balance?
Can you go back now?
1587. What is our accounts receivable? 850. You guys should be doing it on your own. What is the inventory?
0.
0. The inventory is 0.
No, wait. No,
The inventory is what? 4263. 4263, boy. 4263. Common stock is 6,000.
Yeah.
6,000. Sales revenue? 2,150. Sales returns? A debit of 80. Oops. Sorry, this of 80, and then cost of goods? 1370. If we totaled these sides up, what are we going to get here? The debits and the credits should be equal.
So they should be equal.
8150. 8150 and 8150. Got it? Do you see how they balance? Debits need to always equal credits. Okay? Make sense? Now we're supposed to do an income statement. How are we going to do this income statement? We're going to take the accounts that are common to an income statement and fill them in. On our trial balance, what is the amount of our sales? What's the amount of our sales? 2150. And sales returns and allowances is how much? 80. to give us our net sales of $2,070. Our cost of goods sold is $1,370, which gives us our gross profit of $700. See how we're basically